Good morning, everybody, and for the opportunity to talk a little bit about our company, DRDGold, and also our country, South Africa. DRDGold's operations are situated in Johannesburg, which is the largest city in the world that is not next to a river. It became such a large city because of the magnificent gold deposits that were discovered there just more than a century ago. Now, what we do is a little bit different compared to what you'll find typically in the mining industry. We reclaim and reprocess all of the on-surface tailings that had been deposited and stored basically there for the last 100 odd years. Our company is listed on the Johannesburg Stock Exchange as well as here on the New York Stock Exchange. We are the oldest listed company in South Africa that is still in business. Because of our locality and because of the sheer size of our resource, with materials having been deposited there over the last century, we're sitting on just about 11 million ounces of resource. And what differentiates our company from many other companies in that region is that we've got both the infrastructure, the means, the skill set, and the space, plant capacity and deposition space to actually process most of the resource that we have under our control. We've developed over the last 30 odd years a mechanized process that is technology driven. We are on an ongoing basis looking at new and better ways of extracting gold from our tailings feed. Because of the diminishing quality of the resource over time, and also the fact that costs are always escalating, it is an industry where there are cost pressures that are sometimes different to what you would find just a normal CPI. It is important that we optimize every ton of material that actually enters our plant, and therefore we are very dedicated and very focused on continuous technology improvements in our process. We are fully unhedged, and as a consequence, we do offer shareholders and investors full exposure to the gold price. You would also find that our company, share price in our company, because of liquidity and volatilities that's been established over time, does respond sharply to the gold price. And therefore, whilst our long-term vision is to establish a register of mostly smaller boutique-type institutional investors for the longer haul, the share does provide an opportunity to make a bit of money on either side of the gold price cycle. We're very fortunate in the sense that we have a built-in hedge insofar as our currency is concerned. So whilst the dollar may have increased in value and the gold price may have reduced in value over the last few months, our currency is also weakened against the gold price, and we pay our cost and our overhead in local currency. And as a consequence, the margin squeeze locally has not been as profound as you may have found in some of the other jurisdictions where the cost base is in US dollar. We've paid dividends now without interruption for the last 7 years. We target a dividend yield of between 3 and 5%. The last dividend was not a great dividend, unfortunately. I referred earlier to the fact that we are a technology-focused company, and we commissioned new technologies earlier this year, which we had to interrupt for a variety of reasons. We suspended the operation of the circuit, and we had to make a few engineering and management protocol modifications to that particular circuit before starting off with test work again in September. The impact on the share price was quite significant, but it does seem as though market confidence is returning into the share. We saw an increase of 21% in the stock on Monday, and that trend wasn't interrupted through to the end of the week. So we're hoping that it will continue. It is admittedly off a very low base, and that low base is as a consequence of poor operational and financial performance through to about March of this year. But it does seem as though we've turned the corner, and the operating and financial results for the last quarter, ending June of 2014, were significantly better. So we are confident that we're on the right course. We will continue to look at new technologies to improve our extraction efficiency, because that's how we ensure that we can take full advantage of the entire resource under our control. So I suppose in a nutshell, the investment opportunity or the investment story is that we pay shareholders to hold our stock through our dividends, and we provide full exposure to gold price, and hence, depending on where you believe the gold price is going to go, and provided that you do a little bit of fundamental analysis on the stock, you might actually take advantage of the movement that our share offers relative to the gold price. I suppose to put it differently, because our risk is more of a manufacturing or processing risk as opposed to a mining risk. We avoid the big safety issues. We avoid the large labor contingency because we are mostly a mechanized process, uninterrupted mechanized process. I suppose we offer resource volatility and upside on either side of the cycle, but operational risk that you would typically associate with manufacturing. And as I said earlier, we are very much committed to the dividend story, and we will continue to pay dividends as long as the operating and financial results allow that, even in a bad year like the one that we've had in the recent past. The first item on the agenda, when we look at what do we do with our cash balance, and we have a healthy cash balance with very little debt. The very first item on the agenda is what do we distribute to our shareholders and our stakeholders. So that's DRDGold.
Thank you very much.
Doing business in Africa. You can't afford to be without Africa Investor.